Good afternoon, Steve Stone from Azumah Resources. Thank you very much for sitting in on this talk. I think you'll find it very, very worthwhile. So Azumah Resources, a Ghana gold explorer, very successful explorer, and also an emerging producer. So Azumah represents a company that's got tremendous fundamental value and also relative value to its peers. As you'll see, there's a lot of good things about Azumah compressed into what is only, in today's market, about a 15 or 16 million Australian dollars market capitalisation. On the exploration front, the company has already got in the bag 2.5 million ounces. A lot of that is in the measured and indicated category. And recently we announced a major discovery underneath our planned open pits where our reserves are hosted of quite a big discovery at Betkong East Lode, and I'll talk to you a bit more about that and what that can be for the company. And then we've got a very enviable regional scale land position in Ghana that's just going to keep delivering more and more ounces over the next 5 or 10 years, we believe. On the mining and development front, we have a 1 million ounce reserve, and that's going to form, or has formed, the base of a feasibility study which will be producing, for a project that will produce over 100,000 ounces for the next 10 to 11 years at a process grade of over 2 grams per tonne. And the pre-tax IRR is 35%, and I say pre-tax because we're negotiating with the government on some concessions around VAT, royalties, etc. So it's a really good, robust starter project for West Africa, very typical of the projects you'd see there and also in Western Australia. We also have been free carried for the last couple of years by a private equity group called Iberia Capital, based in Perth. They're owning a 42.5% interest in the project by spending about $17 million. And that relationship is going very, very well, and it also comes with a really high calibre technical team. So a lot of short-term, medium and long-term investment catalysts ahead. So we're in the northern Ghana. It's a real emerging hotspot now in the West African Shield. You can see Cardinal, who presented earlier, over to the east. You can see West Africa in Burkina and Ozone. There's a lot happening in this region. It's an area where a lot of people want to be, and a lot of big companies are now looking to get positions there. Our two key deposits, the Kunchi and Betkong, just right in the middle of that north-south tenement package, which is our main package. We also have another package we call Wire East, about 80 kilometres to the east there. The Betkong pit you can see in that mine layout, and the Kunchi pit you can see just 2 kilometres to the south. So I'm going to talk a lot more about those now. That's the joint venture arrangement with Iberia. So they're earning that initial 42.5, and they can take that up to 47.5 if we don't want to contribute to the next stage of funding. The thing about Iberia is they spent about a couple of years looking for an investment, and they finally came across us, and the investment in us was endorsed by one of their partners, Dr. John Horonsky. John's probably the most well-known geologist in Australia, heading up Western Mining's and BHP's exploration, and he's a specialist on orogenic structure-controlled ore bodies, which is this type of ore body. So the Betkong deposit, on the left-hand side, you can see where our open pit is there right at the top. That's where our reserves are. And towards the end of last year and through the last few months, we've been drilling out a new discovery, which we call Betkong East Lode. It's completely blind, and we've got some spectacular intercepts, as you can see, of nearly 100 metres at 2 grams. But within that, there's some very, very rich zones of high-grade material that are also very consistent on section to section. So it's not a one-hole wonder or even a one-section wonder. This has got real dimensions. On the right, you can see it's a sort of a plunging lode, and it's got a strike of about 300 metres. So there's a substantial volume of mineralisation there. And I want to emphasise that none of this is in our resource. None of it's in our reserve, and none of it's in our feasibility study. It's just completely out there, and something that we think is a real game changer for the project and its long-term future. So there's a series of stacked sections just to give you an idea of the dimensions of this discovery. And as I said, this has come right out of the blue, and it was based on a lot of work and structural interp and relogging that John Horonsky and his team did. So we're obviously very happy that we brought them into the project. To the south is that Kunchi deposit, which is actually quite bigger and is a much bigger pit. It's a 1.5 kilometres of continuously mineralisation there, and what we've been looking for there is similar feeder zones into the top there, and we last year drilled a hole and got 44 metres at over 5 grams, and we've just finished some more holes just trying to probe what's going on down to about 500 metres depth. And yeah, sure enough, we found gold, narrow but very high grade, but we'll now start tracking that back towards surface, and we're hopeful that we'll be able to replicate what we've just done at Betkong. And on the right, just gives you an idea of what we're trying to do. These orogenic gold deposits go down 1 or 2 kilometres, so we just see this as the beginning, but we don't want to run away with ourselves. We've got the mining engineers at the moment just running some numbers on what this would look like as an underground mine. And the actual open pits themselves are going to pay for all the mine infrastructure, the plant, everything. So to go underground is really incremental capital. It doesn't have to carry any of that capital investment at all. On the exploration side, just coming away from Betkong and Kunchi and the near mine, brownfields exploration, we've just got 2,500 square kilometres of Birimian rocks. These are the rocks that host most of the big deposits in West Africa. We've got so many anomalies, we're going to be there for years and years, and there's every expectation that 2.5 million ounce resource will double, if not triple, in the next 5 to 10 years. And on that eastern package, lots of what we call low-hanging fruit. There's so many places that we've yet to drill. We've just started to drill out a few discoveries and building up resources and reserves there. Tends to be much higher grade there, and that's good because it pays for the trucking cost over to the west to Kunchi plant there, and it costs you about less than half a gram to get the material over. So very strong foundations for resource and reserve growth. Now, in terms of the actual development project, which I want to talk about now, the operating costs are just where you would expect them to be, all-in sustaining costs in the mid to high, sort of $800 an ounce. We're expecting to bring that down with some work that we're doing at the moment. What's really changed this project is the fact that we're able to increase the resource and reduce the capital for actually an even bigger plant. So our capital intensity per reserve ounce has come down, and that's really made the whole difference to the bottom line. The operating costs have always been quite reasonable, so that's now why we can talk about development. So we're in discussions and running a beauty parade with all the banks at the moment. Those are just a couple of graphs, and you can come to the booth if you like and look at the presentation. But the graph on the left just shows you the cash flow profile, the capital's paid back, initial capital in 1.6 years, and the graph on the right just shows you that feed grade into the plant is always over 2 grams until we get to our end of 8 years mining and then start treating some lower grade stockpile material, but we don't think we'll ever do that. We think we'll just keep discovering and replacing that with more ore, like some of that material from underground. So with that 1 million ounce reserves, we've probably got about another 200,000 ounces that we can see that just needs a bit of drilling out. It's at the moment, it's technically in the inferred category. We don't think it'd be too hard to increase that. We've got that underground material that we haven't even brought into the reserves yet. We've got some optimisation work that will give us a few more reserves, we think. And we've got that exploration, so we think there's a lot of opportunity to increase those reserves. Metallurgy is really good, average of 91% across all deposits and the life of mine. And it's really what the Canadians will call pretty much shovel ready. We've got our mining leases in place. We're pretty close to getting our EPA licences. Importantly for Africa, we don't have to move any communities, and we've got grid power to the site that the government put in place and fully funded for us. A lot of investment catalysts ahead. We're still drilling Betkong, still drilling Kunchi, still doing exploration, still going to be announcing developments with the study. So as an investor, as I said at the beginning, lots of investment catalysts and good reason to consider buying Azumah shares at the moment. And just to really illustrate that, you can buy our ounces on a discounted basis, taking account of the fact that we will be diluted by our partners. You can buy them for about $8, a resource ounce, about US dollars, $8 an ounce, which is actually a lot cheaper than a basket of our peers. And as we track closer to mining, you can see that there's a lot of value to be added. So look, that's the Azumah story. I think a lot of value packed into that company. I hope you agree. Very good time to invest in Azumah. And thank you very much for hearing the presentation.